One of the biggest concerns that taxpayers have that may lead to them actually seeking professional tax help is the concern that they're going to be criminally prosecuted for making a mistake on their tax return. Hey, and I get that anxiety. I used to be a criminal prosecutor, so I know the anxiety that occurs when somebody is being prosecuted, both the person who is being charged with a crime and for their families. So it's a complete legit feeling to have. However, I want to make sure that you have some clear information on the way that the IRS handles mistakes because their primary source or their primary objective is to collect the correct amount of taxes. It's not to criminally prosecute people. Now, there are criminal prosecutions, and we're going to look at the situations where somebody could be criminally prosecuted versus where it's generally handled as a civil matter. So this video is designed to give you some accurate information because there's all kinds of hype out there on social media about what happens in these situations. So what we'll do is we're going to start out with a table that's going to show you the difference between what would result in most likely civil actions versus criminal actions. And then we'll walk through the process a little bit deeper than that. So let's go ahead and look at our first table. All right, so let's go ahead here and let's look at what actually happens if you did make a mistake on your tax return. How is it going to go? Is it going to go on the criminal side or is it going to go on the civil side? What happens? Well, in most cases, it's going to be a civil case, right? Most cases, it's a civil case. You're not looking at criminal prosecution. Criminal prosecution is really limited. It's going to deal with willful acts. There's an intent to engage in some type of act is where you're generally looking at the criminal ones. So most cases fall on the civil side and jail time is not part of the equation. So what you're looking at when you look over on the civil side, what the IRS is trying to do is if you made that mistake, they want to collect the correct amount of taxes. Okay, now what they'll also do is they're going to assess penalties and things because you didn't comply with the tax law, but they're generally trying to collect the correct amount of taxes and then they penalize you for the mistakes on that. Now, what kind of things are you generally looking at on the civil side? They're honest mistakes. There's errors, there's late filings, there's underpayments. Maybe you had a 1099, a little bit of 1099, and you forgot to report that. So those types of things are going to generally fall on your civil side. Now, the penalties for that, they're going to be fines, late fees, penalties, those types of things. So they're going to be financial, monetary issues that they're going to come out of it. The legal standard. So this is different than what you often think of in terms of criminal or what many people often think of in terms of criminal law. In criminal law, we know it's beyond a reasonable doubt. Well, here we're on the civil side, so you're looking at a much lower standard that the IRS has to meet in order to assess these taxes and to be able to collect on them. It's a preponderance of evidence or a clear and convincing standard, depending on the situation. But it's not going to be at that beyond a reasonable doubt situation. And then you can see some of the examples, math errors, missed forms, you forgot some income, those types of situations. So if you're doing your taxes, you're not trying to engage in evading taxes and those types of things, look, it's probably going to be a civil case if you make that mistake. Now, there is a criminal side, so let's just talk quickly about the criminal side. When there is a criminal issue, it's generally to punish and it's a deterrent factor so others do not engage in the same type of behaviors. So you'll see it published a lot of times in the newspapers. They're trying to prevent others from doing this as well. So what you're dealing with is that intent. There's going to be an intentional aspect to it. It's willful. It's fraud. It's evasion of taxes. Not avoidance through legal means, but this is going to be evasion of taxes. And you're still going to get those fines and penalties, but you're also looking at possible imprisonment and it going on your permanent record. So you're going to have a criminal record that shows that, hey, you've been convicted of a crime. Again, willfulness, that intentional violation. What I'll do here after I finish off this slide is I'm going to talk to you about the legal standards, the difference between the negligence and the willfulness, just so we can make sure that we're comfortable with that. This is where, as far as the burden of proof, this is where we talk about that beyond a reasonable doubt. Not all possible doubt, right? It's not, hey, there's, absolutely sure the person did it, but beyond all reasonable doubt. So that's your traditional criminal standard, beyond a reasonable doubt. And then some of the situations where you might see a criminal prosecution is that hiding income, creating false records. Sometimes people create false records or going ahead and lying to the IRS to try to get away from that. Sometimes people create different businesses that they say, hey, I've been paying these expenses and these are business expenses, those types of situations. So there's going to be false records, situations like that. Well, let's go ahead now and let's talk about those different standards, negligence versus willfulness. So that's our next step. Hey, if this video has been helpful for you, please remember to go ahead and subscribe to this channel so that way you continue to keep up with different tax updates, news updates, and understanding how the different tax forms connect. All right, well, let's go ahead and look at the different standards then. So if you are being pursued by the IRS because it was a civil issue, you made an honest mistake, here's basically what's happening. They're saying, okay, there was some type of negligence in there. You didn't use your standard of care, so you didn't use reasonable care when you're performing your taxes. So you can see in the example that I put on here, forgot to report small 1099 INT. So you have some interest maybe from your bank. You didn't report that. You should have reported that amount. You should have known that interest is going to be taxable. You didn't wait for that document, or you threw away the document, or maybe you didn't receive the document. You still have to go ahead and you have to report it. Well, look, those are mistakes. They're honest mistakes. You're going to be pursued civilly on that. So there's going to be penalties and interest associated with that. And that's what happens in a negligence case. So you just didn't follow through. Now, where you get into criminal issues is that willfulness, right? So this is an intentional violation. You have a legal duty and you say, screw it, I'm not going to follow this legal duty. I don't want to pay my taxes on this. So you hide cash income, right? You can see you kept two sets of books. So you have one set of books so you know exactly how your business is actually performing, but then you have your set of books that detail the taxes. Now the IRS finds these two different books and they're not the same thing, right? Well, that is going to be a criminal prosecution because that shows the intent to go ahead and evade your taxes. So it's those types of situations. If you're creating false expenses, right? So you're sitting there saying, oh, I'm paying this person, and you're trying to create some fictitious person. Well, that's going to be a false, that could be criminal. Or maybe you're trying to take, you're going through and you're creating different types of dependents. So you're creating social security numbers. You're dealing with all this type of stuff because you want to get a higher tax return. So you're dealing with this. You know what you shouldn't be doing it. You're dealing with it. That can also be criminal prosecution in those types of situations. And remember, criminal prosecution means that you could be looking at jail time on that. It goes on your record if you're going to be convicted. You're still going to have fines and penalties. So it's significant. But what it has is that intentional element. So when you see willfulness, you're thinking intentional with regard to your taxes. All right. Thank you for watching this video. What I'm going to do next, and what you should watch next, is I'm going to do a video on, hey, what happens if we're being audited? So the audit process, we're going to go through the audit process, and I'm also going to do a video that's going to walk you through what happens if you fail to file your tax return, so we can see what the IRS does when somebody does not file their tax returns. There's going to be penalties and fees, but there's a process that the IRS is going to follow, so we're going to go through that as well. All right, thanks again for watching. Subscribe to the channel, and good luck on your taxes.